Africa's economy is growing rapidly, and Nigeria occupies a key place in this. It will not be out of place to say that Nigeria is a strategic market for all manner of foreign investment. Capital importation represents the total value of foreign direct and portfolio investments into Nigeria in any given period. The latest data from the National Bureau of Statistics shows Nigeria's capital importation in first quarter of 2017 was estimated at $908 million. This represents an increase of 27.75% in relation to the same quarter in 2016, where capital importation stood at $0.7 million. However, in quarter 3 of 2016, capital importation was $1.8 billion, and then there was a decline of 15% in quarter 4, where it stood as $1.54 billion. It further declined by 41.36% in quarter 1 of 2017. Quarter 3 of 2016 saw the highest level of capital importation for the year at $1.8 billion, while quarter 1 of 2016 witnessed the lowest level of capital importation at $0.71 million. Data also shows that in the year 2016, capital importation fell by 46.86% from $9.64 billion in 2015 to $5.12 billion. This was the lowest value since the series started in 2007. FDI has become an important source of private external finance for developing countries, and so these countries are becoming increasingly attractive to investment destination as they offer investors a range of assets. FDI is out to resources and capital formation. It is also a means of transferring production technology, skills, innovative capacity, organizational and managerial practices between locations, as well as accessing international marketing networks. Looking at the composition of capital importation in Nigeria for the first quarter of 2017, foreign direct investment was $211 million, portfolio investment was $313 million, while other investment was $383 million. Despite efforts by government to attract inflows of foreign direct investments, FDI remained the lowest form of capital importation for the first quarter in 2017. Looking at FDIs for the last 5 quarters, Quarter 1 2016 was $174 million. In Quarter 2 2016, it increased to $184 million. Moving on to Quarter 3 2016, it saw a further increase to $340 million. There was another progression in FDI to $344 million. But in Quarter 1 of 2017, there was a sharp fall to $211 million.
All right, given the potential role FDI can play in accelerating growth and economic transformation, developing countries, including Nigeria, is strongly interested in attracting it. All right, joining me now in the studio to talk more about this is an investment professional, Aneef Abbas. Many thanks for your time, Aneef. Yes, we got that report, and of course, it was elaborate enough for us to understand the role of FDI and how much the FDI has been able to actually impute in the country's development. But we cannot talk about FDI without talking about capital importation. And from what we have 3 different categories that make up that, talking about the FDI, the portfolio investment, and of course, other investments. And we'll see that the FDI was, although in the first quarter of 2017, it was a bit high, but still low in comparison with the first quarter of the previous year. All right, now looking at FDIs and portfolio investments in comparison, what's your take with this low return from FDI in the first quarter of 2017?
Okay, thank you very much. So with regards to FDI, like you rightly mentioned, it's very critical for the development of any economy, and as we've seen in 2017, based on the data that was released a few weeks ago, that the FDI represents the lowest composition of the capital importation. And what we've seen is in terms of the investment climate, typically when you look at FDIs, the major drivers are strong investment climate. And what you then tend to look at is what are the macroeconomic data saying, what's the governance and administration situation in the country, as well as the infrastructure operations. So starting with the macroeconomic, so we've seen that given the recent data that was also reduced, Nigeria is still in recession, having reported a negative growth in real GDP again for the 5th consecutive quarter. Then in terms of the foreign exchange market, we've seen a bit of improvement following the introduction of the investors and exporters foreign exchange window. We've seen that the difference between the parallel market and the official market has shrunk a bit, but that doesn't yet give the investors the confidence they need, because with FDIs, unlike FPIs, they tend to be more sticky. So once they come in, it's more difficult for them to flow back out. But with the FPIs, which are really investment in securities, equities, and the likes, they could easily move with just few trades and transactions. But with FDIs, you're looking at the entire investment climate to see, is this climate palatable for me to come in and set up operations, or for me to come in and acquire an existing business and gain control? So in terms of that comfort, investors are not yet seeing it. Investors are not yet seeing that comfort, and that's why we've seen that the level is quite low.
Okay, what you have said now, what takes the greater stand, FDIs or FPIs?
FDIs, I'll say.
Despite the level of importation from the FPIs?
No, when you say what takes the greatest, I mean in terms of impact.
Impact.
Yeah, I'll say FDIs, and I'll say that because FPIs, yeah, they come in, but they can easily go out as fast as they come in. So we've seen for example, the stock market, there's been an increased level of trades, and it's been attributed to part of the FPIs coming in. But once these gains come into the market, it's unlikely for us to see they take profit out and the money goes out. So in terms of the impact for the economy itself, is limited. But for the investors, obviously they get their gains and they go out. But with FDIs, what you see is, like you're aware, it comes in with not just the capital, but you're also transferring skills, knowledge, and in terms of the impact of the economy is more substantial compared with FPIs. So I'll say FPIs.
All right, just before we go on, let's look at the figures. I could see that in 2016 quarter 4, we could see we had this huge amount from the FDIs. That's talking about $344.6 million thereabout. And looking at the first quarter 2017 is way lower at $211.3 million. Now, what do you think would have, because I know that the recession, the country went into recession thereabout in 2016. So what do you think would have been that snag? One would have expected that in 2017 there would be a bit of recovery, but we still had the low turnout in 2017.
Yeah, so in terms of that, there are several factors that would have impacted it. So in terms of 2017, obviously it takes some time for investors because coming into the year, you're coming up with new strategies to implement over the years, and before you then execute some of those things, it might take a bit of time, and ordinarily you might not expect to see the full impact of some of those strategies in Q1. But coming in from Q2, Q3, it won't be unexpected to see some of those impact coming into the market, and you then see an uptick in the FDIs.
Okay, so what's more impactful to the average Nigerian here, the FDI or the FPI?
The FDI.
Why?
So like I mentioned earlier, with FDIs, you're coming in.
That's if you're going to lower it to the level of the average Nigerian.
Average Nigerians. As far as the average Nigerian is concerned, they want jobs. So the recession that we've been in the past 5 quarters has resulted in situations where people have lost their jobs. Inflation is at a high level where you have disposable income going so low, and there's a high level of uncertainty. But with FDIs coming into the market, what that tells you is that investors' confidence in the market is coming back again, and that alone can signal an uptick in economic activities. FDIs coming in, you're seeing activities where you need to, maybe, for example, an investor is coming in to set up a new plant in a new location. Obviously, there will be need to employ people.
Employ more hands.
And average of Nigerian company in the country will be able to access jobs. In terms of skills and transfer of technology, most times you see that most of the developed companies or multinationals, when they come into a market like ours, they're transferring knowledge, equipment, and skills. So in terms of the quality of labor as well, you're also seeing improvements so that the average individual, average worker gets better.
So in one word, are we saying the stronger the FDI in the country, the stronger the FPI?
Exactly.
All right, we'll have to take a break on that note and come back to talk more on how the government can actually strategize to encourage more foreign direct inflow into the country. All right, take a break on Business Nigeria and come back for more. It's Business Nigeria. I am Yemisi Lanredo. Yes, we've been talking about the potential of FDI and the level of foreign direct investment into the country, especially in the first quarter of 2017, where we have it at $211.38 million. Now, I've been speaking with investment professional Aneef Abbas on the program. Yes, Aneef, just before we go further into how strategic the government should be in encouraging FDI into the country, let's look at the table from the NBS as we have it on capital importation on FDI. We could see that services has been the highest on that table and the lowest has been trading. And we'll talk about exporting, developing exports in Nigeria. Now, we still have it very low. Trading is still very low. And we look at other countries, we'll see that more of their FDIs, more of their foreign inflow is from trading, especially looking at the UK, China, the United States. Now, what's happening to Nigeria? So
in terms of trading as a segment of the driver of some of this FDI, you look at what's happening in the foreign exchange market. There's been a high level of uncertainty in that market. But with the introduction of the IEW window, that's the investors and exporters window, we've seen a bit of easing in that market. And for us market participants, it comes to us as the CBN is using this to test run what a floating system will really look like. Because the market is floating, and we've seen that the impact has been relatively positive given the few weeks that it's been in place. So we think that uncertainty has been a major factor in terms of affecting the trading segment of the market. But with the new initiative, we think that will ease up and we'll see. Okay,
with that intervention, how soon do you think we could get a positive result?
Well, it's difficult to say. It's difficult to say, but give or take, I would say from Q3. We should expect to see some
positive results. All right, that's a form of strategy, I would say, from the CBN. Now, talking about the fiscal area, what strategies do you think the government should be looking at to encourage more of the FDIs?
So on fiscal area, I think the major factor, I think, will be to increase spending. Spending has not been as expected.
And the budget has not been signed.
Hasn't been signed as well. But we've seen situation in the market where the government is trying to raise capital to be able to fund majority part of this budget. But at the end of the day, the use of proceeds is largely tilted to recurrent expenditure. Sure. And what you tend to see that sort of encourages FDIs is more capital expenditure on infrastructure. Yes, recurrent expenditure is also necessary in order to get money to the hands of the consumers who are expected to be the one patronizing some of these businesses. But at the end of the day, you need to strike a good balance in recurrent and also the capex.
All right, just before I let you go, we must talk about the Nigerian Stock Exchange. For like 2 weeks now, let's say more of 2 weeks, it's been bullishly bullish.
Yes.
Now, do you think investors are more confident with the market?
Definitely. I think confidence is coming back to the market, and I say that with a lot of excitement because the market has been down for a very long time, and definitely you see a lot of opportunities in the market where some certain stocks or industries are relatively undervalued. And like I mentioned earlier in course of our discussion, the impact of the IEW window has also seen renewed interest from foreign portfolio investors, whereby we're seeing a number of trades coming into the market and is driving activities. Last week we saw trading levels reach significant levels for this year, and I think with the way things are going, the outlook still looks quite positive.
So we actually expect that the next quarterly report would, from different companies would be a very positive one,
yeah,
with this development.
All things being equal, it should be, because if you think about what's happening in the market, really, the GDP figure that came out recently showed that, yes, it's still in negative region, but it was better than the previous quarter.
one.
And from indications in the market, the outlook is quite positive that the right steps are being taken to get us out of this recession. So that bodes well for companies. Then also, in terms of the foreign exchange markets, several companies have been accessing the parallel market to secure inputs for their businesses, and it's been at a high cost. But with the relatively shrinkage in the parallel market, it gives the businesses some easing. As well, there are still some negative indicators in the market, such as the high interest environment and inflation still significantly high compared to the CBN's target. But with the improvements that we've been seeing, even though it's quite slow, we think that the positive confidence to the market is coming back.
All right, and we also hope or are optimistic that, of course, the Nigerians will enjoy the windfall from these returns that we are getting. Yes,
definitely. But at the end of the day, we also need to be very cautious. Because when you see these sort of things within the next few days, it won't be surprising to see people taking profit. Then we might get back to where we are. But aside from, just to even bring a different angle to this, aside from the impacts that we've seen from the FX and the FPIs, we've also seen renewed confidence on the individual side of the market, because we have the institutionals, which most of the FPIs will fall under. On the individual side, there's been a lot of renewed confidence, and this has been largely driven by the introduction of technology, use of more technologically driven products in the market, both on the regulator side and the firms themselves. So a number of firms now have the online platform where it's so easy for the individuals to trade. Then with the e-dividend mandate that the SEC has been pushing, that's also increasing the confidence.
All right, a lot of improvements from the Nigerian Stock Exchange, and of course the Securities and Exchange Commission. Investment professional Aneef Abbas, thank you for your time on Business Nigeria.
Thank you, Yamsi.
We appreciate it.
Yeah.